Hi, I'm Joe Catrambone, CEO of the Stewart Martin County Chamber of Commerce. Welcome to Talkin Business. I have the pleasure of having the managing principal from PMD Capital with me today, Max Ducharme. Max, welcome, and thank you for taking the time to come up here and meet with us. We appreciate it.
Thank you, Joe.
Max, I'm going to read a little bit about so people know what you are and what you do, and then we're going to get into some. We'll discuss it. Okay.
Sounds great.
So, PDM Capital Management is a real estate investment firm based in Jupiter, Florida. The firm specializes in the acquisition and management of multi-tenant retail, office, and industrial properties, with a focus on the region spanning from Palm Beach County to Florida's Space Coast. In the first 12 months of operation, they acquired 4 properties for a total of $26 million in real estate acquired. Where? 26 million, that's a lot of property. So that caught my attention right away, my interest.
So that's right, Joe. We did 4 deals last year. I'm very close to tying up 2 more right now. The first deal was on Military Trail in downtown West Palm. That was $8.7 million. That's a collection of auto-related tenants. Second deal was a industrial property in Cocoa, Florida. So those are really my northern and southern boundaries. And then deals 3 and 4 were between those 2 boundaries, with deal number 3 in Stewart. We own a property in historic downtown Stewart. Some of our tenants include Kilwins, Gumbo Limbo.
Oh, you got valuable property here.
I would say we were probably the largest property owner in the historic downtown. And then we own a flex industrial property in Palm Beach Gardens, which is a beautiful asset. It was our latest purchase, and I feel very good about that one.
How do you find out about these properties? Are they listed, or do you go out and seek properties that you would like to buy and make an offer, or how does that transaction come about?
Joe, many of the people of my generation, they spend their time on Instagram, social media. I find my fun by knowing everything about the market. I've selected a market that I consider pretty manageable, so everything is within, call it a 1.5 to 2 hour drive north of my house, a little bit south as well. And every single asset has its own story to it. So some were acquired through brokers, some were acquired direct. The property in Cocoa, for example, was a gentleman I used to acquire land from with my previous employer, and he happened to own an industrial asset, so we stayed in touch, and I purchased it direct from him. And oftentimes on the drive over here, I saw a building that looked of interest to me. I tracked down the owner while I was at a red light, and I shot him an email.
So you're out there scouting around too. Do people come to you also? I mean, will people come to you and say, "Hey, I've got a property that that would like to sell," or do you broker the property, or do you keep them?
I acquire them. So my business is as follows. I've got a very small base of investors that we acquire properties on behalf of. These are all gentlemen in their, 50s, 60s, 70s who have had successful business careers, and they like the idea of investing with someone else who does the legwork. And I will create the business plan and design why I believe it makes sense to acquire something at what I believe is a good purchase price in relation to the broader market, and why I believe that we can add value to that asset over time. And the idea is that ultimately we'll refinance that, put new debt on it, or we'll sell it in 3 to 5, sometimes 7 years, depending on the asset, and we'll generate a return for our investors. And if I'm successful in doing that, I will take a piece of that return, same way as any typical investment manager would.
But so when you acquire something, it's with the express intent of being able to resell it, rather than, or do you have a covey of properties that you all own?
So, Joe, I think what separates my business from some of my competitors is I don't focus on any one thing. So I'm focused on different asset classes. Every asset has its own story. So some of the assets we acquire, we buy them specifically to sell. All I will represent to my investor is that the business plan is to sell this between years 4 and year 6. We'll pick our moment, the best point in time between years 4 and 6 to sell the asset. One of our other assets, I looked at my investors and said, guys, I think this would make a lot of sense to own forever. What do you think about that? And when I say forever, that's 10 to 15 years. And we have a structure in place that allows us to own it for 10 to 15 years. So there is no set formula, but no matter what, we're always going to own something for a minimum of 3 years. Sometimes we own it for a lot more.
Would a business that, say, is floundering be of interest to you if in other words, if there was a business floundering and you thought it was mismanagement or it was a viable investment that could be tweaked and made profitable, is that the type of thing you would do too?
Probably not. I wouldn't like to say that I'm focused on only one thing, but where I feel most comfortable is real estate and acquiring an operating business. That's really not what we're looking
Okay,
to
so
do.
it's strictly real estate.
That's right.
Yeah, okay, I get it. You don't want to be involved with the minutiae of running an office every day and those types of things. You want to just. But you're saying you'll sometimes you'll recommend that a buyer keep something from 4 to 6 years. Is that just because the property is going to increase in value over that time?
So I'll
And
walk you.
what would the ultimate reason be for you to say, let's hold this for 4 years?
I'll break that down exactly for you. So
Okay.
what we're focused on is retail, office, and industrial. Those property types, they all have long-term leases. And what I look for when I buy a property is a property with leases that had been signed prior to the recent inflation we've been seeing. So a lot of the leases were signed in, call it 2018. Those leases now have a bit of maturity left. Maybe they were a 7-year lease. It's coming due now. Maybe it's a 10-year lease. We got a few more years to wait. And so what I like to do is basically go through the list of tenants of a property we're buying. Say there's 5 tenants, for example. I'm going to basically see that one of those tenants expires in 2025, one in 2026, one in 2028. And I like to be able to go through the length of time it will take for every single one of those leases to turn over and put them on my lease, because my lease is a little bit more diligenced, a bit more institutionalized, and I will then dispose of the asset to someone once all of the risk of the asset has been taken out. And it sometimes takes up to 5 years to take all of the risk out of an asset.
So when you're looking at a lease, let's say a 10-year lease that's only got 3 years left on it, I would imagine that when that 10-year lease was signed, there were escalation
Exactly.
clauses each year. So would it be up to the current, in your opinion, obviously you don't have a crystal ball, or in your experience, by the time you get to year 10, would that amount of money that they were paying be equal to what the current market price is?
No.
It's below it?
Below. So, and that's the beauty. So, as you know, the escalation clauses, they're between, call it 2 to 4%. Inflation since 2021 has been a hell of a lot more than that, especially in Florida, where there's not just the inflation factor, but there's the growth factor. So there's 2 criteria that go into the escalation. It's what's the market growth going to be, and then what's the inflation going to be. So in Florida, we've seen, especially in our target markets, we've seen growth in some instances of 10% per year compounding. So oftentimes we're seeing leases that were signed in, call it 2018, for example, that we're now able to double the rent in 2025.
Yeah, I'm going through it. The reason I'm asking the question is we're going through a situation right now, and you're familiar with our chamber building.
Of course.
The second floor is rented out. And when we first, I just wanted to get people in there because when we had a client that took up the whole second floor. So we could break it down. It's about 10 or 12 different offices. But anyway, our market price just to get people in there was like $10 or $12 a square foot.
Sure.
And they've been paying that. We raised maybe a 3% every third year or something like that. So what we're running into now is people who are maybe paying, with the escalation, they're paying maybe $15 a square foot. What's the going rate now? 20 something?
It'd be in the 20s,
Yeah.
so you're below market.
Oh,
and
we're way below market, so we're trying to bring it up and it's difficult, meeting with these, and we're meeting individually with each tenant and saying, look, here's the situation. The bottom line is that we're losing $103 a month. I mean,
Your expenses have grown, but your rents haven't.
exactly. And as an example, we have an elevator, and we've had problems with the elevator. We spent probably $30,000 in the last year fixing the elevator.
Sure.
So there's a lot.
There's a lot of maintenance that goes into
And we
it.
just put a new air conditioned unit up there. So we've got to bring this up to market price, and some of the people are saying, "Oh my God!" And I understand if you do have 3 or 5% increase, but when you're looking at 15-20% increase, I feel guilty.
Naturally, it's challenging.
Yeah,
that's
yeah.
for sure.
And there have been loyal tenants; they've been there for a long time, but we're not in business to lose money.
And you hit the nail on the head there, right, Joe? So for a real estate owner, we're in the business of making money. Our money is generated through our leases and through managing our expenses. And our tenants, they're in the business of selling retail goods, moving freight through our warehouses. And if you were to explain to them that one of their suppliers or one of their customers was offering them something below market, they would say, no, I'm not going to accept this at below market. It has to be at the price that's fair for me. And all we're doing is what's fair for us. And you just have to remove yourself from that process as having a relationship with them.
Yeah, I'm trying. It's but it's I like I said, I almost feel guilty because what's the just as an example, the average person, if they're lucky and their employer gives them a 3% raise every year, maybe 5%. But now I'm looking at jacking people's rent up 20-25% in one swoop.
So sometimes, Joe, a percentage like that, it sounds like a lot, but in absolute dollars, it probably isn't.
It's not.
So we've actually tend to focus on smaller unit spaces, so that percentage increase can be larger, but the absolute dollar impact for the tenant is negligible.
I get, and that's what I'm trying to explain. One office up there is really small, and the tenant's paying $168 a month, but no utilities. We pay everything. What are you going to rent for $168 a month?
Going from 168 to 200 is a pretty meaningful percentage,
Yeah.
but that $30 to this tenant, it's nothing. He's going to spend that on lunch in a couple days.
I try to explain. I try to explain that, but people are a little taken back, but anyway, it's working out, but it's not pleasant.
Joe, that's why there's property managers, because they provide a layer between yourself as the owner and the
Yeah.
tenant, but you don't have that benefit because you are on the floor below and you have to see them every day.
Yeah, well, yeah, and for me to have a property manager, I mean, it's not like I have 20 units up there. I have 4 or 5 units up there, but
You need yourself a bad guy.
yeah, I do. I guess I do. Oh gosh, I noticed, and you're not obviously old enough, but you went to Wharton. It's where Trump went, right?
And Elon Musk as well.
Oh, that's right.
He was
Musk
at
too.
Penn. I don't think he was at Wharton, but yes.
So does the school make a big deal out of that? The fact that Trump is an alum?
So, funnily enough, I think they do their best to make it be less well known. I don't think that's something that's necessarily glamorized within the campus, frankly.
Really?
And his first election took place while I was there. So I was there for 2 years of business school, and he was elected kind of immediately between the midway point of my time there. And it was definitely a negative sentiment by the majority of the campus, frankly, and I don't think people take it with all that much pride there.
Was it kind of liberal?
It is, like many of
Most schools.
like many of the schools. I was listening on the radio today that Trump has decided he's going to suspend Harvard's
Yeah.
tax deferred status. So, not tax deferred, tax waive status.
It says here your experience included M&A advisory, master plan, high rise, and suburban development, and acquiring cash flowing properties. We covered that. You think we
Acquiring-
need to talk?
Sure,
wanna jump in?
acquiring. That's what I'm doing now. That's where I obviously focus my time, and it's what I enjoy doing the most. But I've had the benefit of working in multiple different verticals within the business world, and I've taken kind of little bits from each of those, and that's what I'm applying to what I'm doing now. So that's probably the most relevant subject to discuss.
So are you provide all the capital, or do you ever have to go out and?
I'm raising all the money.
You're
This is it's not my capital. I'm raising the money. I am the one who, as I said, I come up with the idea. I do all of the work, and I'm rewarded. If my investors do well, I do well. If my investors don't do well, I don't do well.
So you have a book, so to speak, of investors.
It's a relatively small book. I've got 4 or 5 gentlemen who all invest anywhere from $500,000 to $2 million per deal, and I make one phone call, and they say, "Max, if you
Yeah,
believe in it,
yeah,
I
yeah.
believe in it."
Oh, that's nice. Yeah. So you've been successful, and your reputation is good, or you wouldn't be able to just make a phone call and have an investor jump in. That's interesting.
It's a lot easier to raise a larger number from one person than it is to have 10 people putting in 50
Yeah.
grand, which is not something I want to do.
How do you make those connections? How do you find those people, the investors?
So actually, I was quite lucky. So I coming out of business school, I worked for a very large scale developer here, and in that capacity, I managed our investors because obviously I knew the most about our projects. So it was me who both did the work, boots on the ground, and communicated with our investors. And I then joined another firm. I left that first firm. I went somewhere else, and the first organization, it started to see some kind of some cracks after I left. And so I phoned my investors and said, or phoned the investors of the first company and said, "Hey, gentlemen, I'm thinking of going off on my own." And they said, "Well, we've seen how the organization has changed with you not here. Of course, we'll back you."
Oh,
So it was a nice kind of vision for them to see what it was like without me there.
so is it a normal thing for you to take your investors with you, or is that something that's looked down upon? Is it like hijacking?
No, I think that my previous employer was proud of my decision to leave and was even more proud of my decision to go off on my own. And I suspect that he will be an investor in our deals at some point in the near future.
That's really nice. That's really good.
I've been waiting to make that phone call.
I'm sure.
I'm confident what the answer will be.
Well, that's good. That's great. Obviously, as I said, if you weren't successful, you wouldn't be moving on like you are. So we've covered what I found I wanted to talk to you about, but sometimes we miss something that you may want to talk about or have viewers know about either you or the company or that we missed.
You know, Joe, I think this conversation was pretty productive. I think we covered a lot. Frankly, the one kind of overview perhaps that'd be worthwhile is just to say, a quick summary. My business is based in Jupiter. I'm focused on acquiring retail, office, and industrial assets between Palm Beach, Martin, St. Lucie, Indian River, and Brevard counties. And we've had a lot of success buying low-risk assets and turning them into very high profit. One of the things I take pride on is none of my assets are going to be home runs, but they're all going to be singles and doubles, and sometimes a handful of singles and doubles with zero risk of loss, or I won't say zero risk.
That equals a run.
Yeah, it equals a run if you can do a few of
Yeah,
them. So, and that's what I'm focused on. So, if anyone wants to chat, I'd be happy to speak with them.
They've got
and-
your information on the screen, and we'll be playing it. The video will be on our website. And Wayne will explain that to you. But I appreciate your coming up here and taking the
Absolutely.
time to meet with me.
Joe,
Wait,
thank you for having me. Good luck with your tenants upstairs and
Yeah.
with your sod at your home.
Thank you. I appreciate it.
The
I need to-
rain
I
is
need to do a
coming.
rain dance. Thank
Yes,
you.
we got a little bit of a rain dance.
Okay, we're good.